Hi everybody and welcome to the London Session Update with myself, Kathleen Brooks, on Monday the 15th of April 2013. Well, there's a bit more of a risk-on tone to the markets today. We've seen, after the sharp sell-offs on Friday, we've seen some basing going on. There hasn't been too much in terms of economic data to direct us so far, and actually pretty thin on the ground today on the European session. This afternoon we do get Draghi speaking and he may talk in some dovish tones, but overall we've seen the euro base, for example. The pound has got its groove back a little bit, but the yen continues to strengthen slightly as we start a new week. European stock markets, they're fairly flat. The FTSE's been hit a little bit in the same way that the Aussie dollar has, and I'll talk a bit about that later. But basically the big news overnight was China. It had its GDP for the first quarter. It missed estimates, came in 7.7%. That was weaker than the 8% expected. We also saw some weakness in retail sales and industrial production. Now this is causing some concern because credit growth was very strong in the first quarter. So if credit growth was very strong and that's not translating into economic growth or GDP growth, then there's a bit of a missing link in the Chinese economic recovery story. So that's just taken the edge off Aussie dollar. As you can see there, this is a daily chart. We really have come off very, very sharply there, but we have managed to find some very good support at just above 103.95, which is the 200-day moving average. So that is the yellow line on that chart. So we've managed to stay above there. So we've stayed above 104. However, the way that we rejected 106, which is the top of the most recent of the long-term range actually in Aussie dollar, is a bit of a concern. So it suggests that we're not yet willing to break out to the upside. Now that does suggest that the bottom, the fact that we've held very good support suggests that the bottom or the downside in Aussie dollar is well supported. But the fact that we really rejected 106 suggests that the bulls aren't there yet for Aussie dollar. And we may oscillate within this 200 pip range for some time yet. Again, there's some key economic data, but not coming out till the end of the month. So we think that first quarter CPI, for Australia will be really important. We also get RBA minutes today, so any sign of dovishness there could also just weigh to the downside in Aussie, but do watch out for that one. The other thing, of course, is gold. We saw a huge gold sell-off on Friday. That was triggered by a few things. Number one, concern that Cyprus was going to have to sell its gold reserves, and that could trigger other Eurozone countries or other highly indebted Eurozone countries selling their gold reserves. It also came on the back of some investment banks actually making a trade suggestion to go short gold. We think the central bank's action had more of an impact, but it certainly did cause a sharp sell-off. Let's take a look at this. This is the weekly chart, and in fairness, gold really has been quite weak for most of this year. But what was significant about Friday's move is that we managed to break below 15.25. That is the low that had held for 12 months. Now, the gusto with which we went through this and the momentum to the downside really suggests that this isn't just a correction in the gold price, but it could be the start of a downtrend. As you can see, 14.26 has been the low so far today. That's the lowest level since in 2 years. It also combines with a cluster of weekly moving averages, or the 200-week moving average, as you can see in the chart in front of you, which is a weekly chart for gold. So right now we're managing to just claw our way back. 14.52 has been the high so far today. In this recovery phase during the European session. So we do think there could be a chance that we actually go sub 1400 now, but we think we could oscillate between 14.15 and 14.22. A break below 14.22 opens the way to 13.50 and could trigger a whole wave of new selling pressure. So overall, not very positive on the gold price. And the Aussie also looks quite, where the downside is certainly supported at the moment. It doesn't look like the bulls are there to help it to rally. So overall, looking out for Draghi this afternoon, some economic data out of the US as well. But good luck trading today, and please do join us tomorrow for more. Thank you.